The absolute lie that they are selling you is that institutional Bitcoin is good news. BlackRock, Strategy, Fidelity, Wall Street, the same suits who called this rat poison squared are now buying it like their life depends on it.
I think it's rat poison.
And everyone in financial media, they're acting like that's the moment we've been waiting for. The legitimacy signal, the turning point, the thing that proves Bitcoin is real. Well, here's what on-chain data actually shows. Bitcoin ETFs bled 4.5 billion in the first 2 months of 2026. Bitcoin dropped. Retail panic sold. Headlines screamed bear market, and Strategy, one company, bought 11 consecutive weeks. They dropped 1.28 billion in a single week while the price was going down, mind you. Paper losses on the whole stack didn't matter. They bought more. And here's the part that should make your stomach drop. They funded it by diluting their own shareholders. They sold paper, stock, to buy the hardest money ever created. They used the fiat system to exit the fiat system. And they took the inventory with them. This isn't institutional adoption. This is a supply capture operation. And it's happening in broad daylight. Thunder! Two things are happening at the exact same time right now, and almost no one is connecting them. Institutions are engineering the most aggressive supply acquisition in Bitcoin's history. They are buying through the bear market, through the paper losses, through headlines that say cycle top, and bear market confirmed. They are not rattled. They are accumulating. And they're doing it while retail investors hand them the inventory, one panic sell at a time. Today we break down the full picture. Who is actually buying? How the mechanism works, what it does to the available supply, and what the only rational response is when you understand the game that's actually being played right here, right now. Yeah, the transfer of wealth is happening right now, in real time, on chain. It is not subtle. And when you see it, you can't unsee it. Let's start with the headline number. Strategy. The company, formerly known as MicroStrategy, now holds 738,731 Bitcoin. That is not a typo. 738,731 coins. Roughly 50 billion at current prices, and they are sitting on paper losses right now. They paid an average of about 75,862 per coin. Bitcoin is trading around 68K. On paper, they're down. And last week, they bought more. February through March 2026, while the ETFs were hemorrhaging billions, Strategy made its 11th consecutive weekly purchase. The latest buy, 17,994 BTC. In 1 week for 1.28 billion. Now think about how they actually paid for it. They didn't have 1.28 billion just sitting around in a checking account. They issued stock, common shares, and preferred shares with an 11.5% dividend. They diluted every single existing shareholder to fund the purchase. They printed paper. Then they traded that paper for the hardest, most finite monetary asset that has ever been created or discovered. They used the fiat system to exit the fiat system. And don't worry, they're passing the savings on to you. At 68K per coin, 738,731 Bitcoin is approximately 50.2 billion. That's 3.5% of all Bitcoin that will ever exist, held by one publicly traded company. One. That's not institutional adoption. That's colonization. And it's not just Strategy. Public companies collectively hold over 1.1 million Bitcoin. The US government holds 328,372 BTC, originally seized through civil forfeiture, now officially designated a national reserve asset by executive order. Texas just passed legislation to buy Bitcoin directly with state funds. Arizona and New Hampshire have signed their own laws. The sovereign acquisition race has started. Now let's talk about what Bitcoin's total supply actually looks like underneath all this. There will only ever be 21 million Bitcoin. We've mined about 20 million already. That leaves roughly 1 million left to be created, spread across the next 100 years at a mathematically decreasing rate. Of the 20 million already mined, somewhere between 3 and 4 million are estimated to be permanently lost. Private keys on dead hard drives, Satoshi's original wallet, untouched for over 15 years, old laptops and landfills, gone forever. So the real functional supply, coins that can actually be bought and sold, moved, is closer to 15 to 16 million, and a rapidly growing share of that is being absorbed into institutional vaults that have no plan to sell. They are not price takers, they are supply hoarders. The math behind what that does to future price discovery is not complicated.
Trade the currency for capital. Trade something fragile for something resilient. Trade something local for something global. Trade something physical for something digital. Trade the security for the commodity. Trade the commodity for the scarcity. You can't go wrong moving in that direction.
That's the mindset driving 11 consecutive weeks of billion-dollar purchases with paper losses. They understand what they're buying. The question is whether you do. This is the setup. And it gets darker from here. While we're talking about self-sovereignty, let me tell you about the team that will actually walk you there. The Bitcoin Way is a Bitcoin-only consultancy. They take you from wherever you are right now. Exchange wallet, basic hardware wallet, wherever. All the way to true sovereignty. Your own hardware wallet connected to your own node, full transaction verification. And they stay with you until the skills are mastered, not a one-time setup call. They're your actual Bitcoin IT team. They also handle personal cybersecurity, privacy phone, private browsing, getting you out from under big tech surveillance. And if you're thinking about a plan B in a Bitcoin-friendly jurisdiction, they'll walk you through a residency in Panama. What are you doing? Schedule a free 30-minute consultation using that link below in the show notes. Now let's talk about the ETFs, because this is where the story gets, strange. For 5 straight weeks in 2026, Bitcoin ETFs were bleeding. Total outflows, 4.5 billion. BlackRock's IBIT, the biggest Bitcoin ETF in the world, alone lost 2.1 billion. Bitcoin fell from 80K to around 68K. The headlines were brutal. Bear market confirmed, 4-year cycle top. Bitcoin's dead. Every retail sentiment indicator went red. The fear and greed index went off the hinges. And then, on March 9th, one day, the entire narrative reversed. 167.1 million in net inflows. IBIT alone brought in 109 million. Fidelity added 60 million. One day of buying after 5 weeks of bloodshed, and suddenly the tone shifts. Here's the number that should stop you cold. BlackRock controls 96% of net ETF volume. One firm, 96% of the volume. Does that sound like a competitive market or a command and control structure? When BlackRock buys, the number goes up. When BlackRock stops buying, the number goes down. When BlackRock reverses on a single Tuesday in March, the entire narrative flips from bear to recovery. Bitcoin, the decentralized, permissionless, censorship-resistant money that was designed specifically to route around centralized control, is now moving primarily on the portfolio decisions of one asset manager in New York. That is the current reality. And it's worth sitting with for a second. The ETF structure created a direct pipeline from traditional finance right into Bitcoin. When that pipeline opened in January 2024, everyone celebrated. And they should have. The inflows were enormous. But the pipeline works in both directions. When institutional portfolios go risk off, when hedge funds get margin calls, when equity markets crack, they can hit the ETF redemption button on the same day. The correlation to traditional risk assets just got baked in structurally. That's a new dynamic. It didn't exist before 2024.
But it is a legitimate financial instrument that allows you to have maybe uncorrelated, non-correlated type of returns. I believe it is an instrument that you invest in when you're more frightened, though. It is an instrument when you believe that countries are debasing their currency, debasing their currency by excess deficits. and some countries are. I believe we have countries where you're frightened of your everyday existence, and if you have an opportunity to invest in something that is outside your country's control, then you can have more financial control. And so I'm a major believer that there is a role for Bitcoin in portfolios. I believe you're going to see that as one of the asset classes that we all look at. I look at it as digital gold, as I said before, and I do believe there's a real need for everyone to look at it as one alternative to, I would say, the optimism that I have in the world. If you want to hedge hope, Bitcoin is not an instrument for hope unless you're hopeful you're going to make a lot of money on it. But I look at it as a vehicle in which you're expressing your financial acumen in something that you're more frightened of the world, you're more frightened of your existence. And I believe there's a great industrial use for it. And I think a lot of people are missing that.
Right. And now Wells Fargo, Bank of America, and Vanguard are distributing Bitcoin ETFs to their clients. The banks that told you Bitcoin was a scam for a decade are now the delivery mechanism for institutional Bitcoin exposure. Now look at what's happening on-chain. Exchange inflows, that's coins being moved onto exchanges to be sold, peaked at about 53,700 BTC on February 20th. By March 9th, they had dropped to 2,879 coins. That's a 95% decline in 3 weeks. Let that sink in. The people who were going to sell have mostly sold. The capitulation happened. The weak hands cleared. And now the coins that remain are sitting with holders who have demonstrated through a $12,000 drawdown that they're not selling. Here's how the machine actually operates. Retail panic sells during the drawdown. On-chain data confirms the selling is concentrated in small wallets, the sub-1 coin holders, the people who got in near the top and couldn't take the pain. Meanwhile, wallets holding 100 to 1,000 Bitcoin, the range where serious institutional and whale accumulation shows up, are aggressively buying the dips. They absorb your fear. They buy your panic. They are the bid. Then the narrative flips. ETF inflows reverse in a single day. Price recovers. Retail FOMO's back in, but now at a higher price. Buying from the people who bought their panic. And the cycle repeats. Except each cycle, a little more supply moves into vaults that don't sell. The liquid float gets smaller. The price floor gets higher. And the window to accumulate at any reasonable entry gets narrower. This is not a conspiracy theory. This is on-chain math. The data shows it. And the dark, perfect irony is that it's completely legal.
How do you make money? Well, let's talk about individual Bitcoin strategy. What should you do? Make Bitcoin your primary treasury asset. Convert your excess earnings to Bitcoin. Utilize subsidized credit. If the government will loan you money, borrow the money at cheap rates and buy Bitcoin, and find a tax-efficient way to invest the Bitcoin. What shouldn't you do? Don't quit your day job. Don't lose your focus on Bitcoin. Don't use margin loans and trade with leverage. You get wiped out while you're asleep on a Saturday night. That's not good. Good? 30-year loan for 3% backed by the government on your land. Bad? Overnight 10x leverage. So what's a typical person? Well, we actually model an individual, and we said, what if you had $750,000 in net assets, and you made $200,000 a year, and you're going to make 5% more every year, and you got a savings rate of 25%, and you can invest $50,000 a year. Well, there's a lot of strategies. You could be the normie and do a normal strategy, diversified portfolio. You can be a 10%er, and you can put 10% of your assets into Bitcoin. You can be a BTC maxi and put 80% of your assets and put 80% of your earnings into Bitcoin. You could be a double maxi, and that's when you basically take an extra $250,000 loan against the house. And then the triple maxi is you finance the house for Bitcoin, you buy Bitcoin, You flip all your assets to Bitcoin, and then you move to a cheap tax jurisdiction where you actually can avoid some taxes and invest an extra 50 grand in Bitcoin, maybe a Singapore or UAE or something.
That's the machine. Supply leaving exchanges, whales buying the capitulation, BlackRock controlling 96% of the volume, and now the biggest banks on earth serving as the distribution channel. You are not competing with other retail investors anymore. You are competing with the world's largest asset manager, and they have infinite patience and access to the money printer. Here's a move the institutions already know. You can use your Bitcoin as collateral to borrow cash without selling a single sat, without triggering a taxable event. That's exactly what Ledn does. Bitcoin-backed loans, no credit check, no bank approval. Your Bitcoin is the collateral. Pristine collateral. They've funded over $10 billion in loans since 2018, and the collateral is never lent out. That's a key differentiator. Make your stack work without giving it up. Head over to ledn.io/simply today. That's ledn.io/simply. So here's the honest version of what this means for you. Not the stay bullish version, not the number go up forever version. The real version. First, kill the 4-year cycle in your mind.
I am just a figment of your imagination.
The idea that Bitcoin reliably follows a pre-programmed halving-driven boom and bust cycle is a useful heuristic that is now dangerously incomplete. The halving still matters as a supply mechanism. Fewer new coins entering the market every day is real. But the primary driver of price is no longer the retail-driven fear and greed, everybody gets rich cycle. It's institutional demand and global liquidity. The ETFs created a direct fire hose from TradFi into Bitcoin. That means the price is now sensitive to Federal Reserve policy, maybe even a little more than it used to be, to equity market correlation, to institutional risk-on, risk-off behavior. The 5-week bleed wasn't random. It happened while equity markets were under pressure and institutions were pulling risk. Stop watching the Bitcoin price chart in isolation. Start watching ETF flow data every morning. Farsight Investors publishes it daily. That's where the signal is. Second, and this one I need you to hear clearly. Every Bitcoin you leave on an exchange is a Bitcoin that is part of the institutionally controlled float. When you leave coins on Coinbase or Kraken or any custodian, those coins are in the pool. They're part of the liquid supply that the machine can price against, maneuver around, and when the time comes, acquire from you at the moment you're most likely to sell. Taking your coins off the exchange and into self-custody is not just a security upgrade, it is a strategic act. You are personally removing one more unit from the float that BlackRock prices against every Satoshi. And cold storage is a vote for a tighter supply. It's the only lever the individual investor has. Not your keys, not your coins isn't a slogan. It's a war cry.
You can self-custody your Bitcoin for about 1 basis point a year, assuming you buy good hardware wallets and signing devices and spend a day a year to keep track of it. Now you've got a 10,000-year asset.
Right? That's the mindset. Now let me give you the full framework. Third, match their time horizon, not their capital, just their patience. Strategy bought $1.28 billion in Bitcoin last week with paper losses on the entire stack. And they bought more. Not because they're reckless, because they understand that the supply is fixed forever and the demand is just getting started. They're not looking at the weekly candle. They're looking at the decade. They're looking at the math of 21 million coins, 3 to 4 million lost, 1 million more to be issued over the next century, and they like what they see. Your edge over the institutions isn't money, it's mobility. You don't have compliance departments, you don't have LP redemption schedules, you don't have quarterly earnings calls where you have to explain your Bitcoin position to boomer shareholders who don't understand it. You can hold more tightly, move faster, and custody your own coins in ways that BlackRock structurally just cannot. The window to accumulate is not closed, but it is closing every week. Every 17,994 BTC purchase, every $109 million that flows into IBIT in a single day. That is supply leaving the open market permanently, coins going into vaults with no plan to sell. The dream of front-running institutions was always a nice story. The institutions are already here. The question now isn't whether you can beat them, it's whether you're going to own something, anything, before the price of entry moves past what's accessible to a normal person. Self-custody, long time horizon, watch the flows, not just the price. That's the framework, not a promise, not a prediction, a survival strategy for a market that has fundamentally changed. You've got your Bitcoin locked down, smart. But self-custody doesn't end at your wallet when the grid goes down. And at some point it will. Do you have communication that doesn't depend on cell towers? Sat123 has satellite phones, Starlink kits, Faraday bags, portable power stations. Everything you need to stay operational when the infrastructure you rely on decides to stop working. This is sovereignty that extends beyond your wallet. Code SIMPLY gets you 15% off your entire purchase at sat123.com/simplybitcoin. Head over there today. Let's land the plane. Strategy owns 3.5% of all Bitcoin ever. 11 consecutive purchases through a bear market, funded entirely with paper, diluted stock, while sitting on paper losses. BlackRock controls 96% of net ETF volume. Exchange inflows dropped 95% from peak. Wells Fargo and Bank of America are now the distribution channel. This is the game. The whales are building fortresses. They're not in a hurry. They're not rattled by a $12,000 drawdown. They are not watching the weekly candle. And you now have a choice. Stay in the pool, on the exchanges, in the ETFs, in the institutionally controlled float, and eventually become their exit liquidity, or pull your coins into self-custody, take yourself out of the machine, match the time horizon of the people buying 1.28 billion a week with paper losses, and refuse to be eaten. Hold on a minute. Look at our likes!
3 or 4 times, maybe.
I gotta pump those numbers up. Those are rookie numbers in this racket.
If this episode gave you something, give us a pamp and share it with someone who needs to hear it. Some poor paper Bitcoin holder. Like it, comment, tell us where you think this all goes. Hey, I love you guys. Catch you next time. Peace.
If you prefer to go down with the ship, you.